We've got a jam-packed show today. Not a lot of time to waste, so let's get going. Good morning, everybody. We got Crypto Friday. We got bank earnings. We got Michael Batnick in the house at 9 o'clock, so a lot going on. Good morning, chat. Let's go. Where's my intro? Come on now.
Oh, yeah. Friday before a long weekend. No big deal.
No big deal. No big
Whoop,
deal.
whoop, whoop. Whoop,
No
whoop.
big deal.
Whoop, whoop.
Woot, woot.
Should we tell the story? We should tell the story for those who are unaware. So, fun fact, on Fridays before a 3-day weekend, New York Stock Exchange at 3:33 on the Friday before a 3-day weekend, the whole floor starts going whoop, 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 whoop. And it's super loud. And then throughout the day, it starts getting louder and louder and building up. So like right now, it's 8:30 in the morning in the New York Stock Exchange. There's probably 3 people there. But maybe like in an hour, there'll be 10 people there. So you'll start hearing a random like whoop, whoop, right? Like kind of like random throughout the day. And then at 3:30, it starts really building up and getting louder and louder. And then at 3:33, everybody goes nuts. And then around 3:34, the whole New York Stock Exchange starts booing each other because of disappointment that it wasn't loud enough. So this is like an old school New York Stock Exchange tradition. I've asked Jay Woods like how that tradition started.
Yeah.
And he says he doesn't know. And he asked Arkashian, and Arkashian doesn't know either. So that's how long it's been going on in the New York Stock Exchange, that even Arkashian can't figure out when that started. So it was before Cash and before Jay.
And so this is every Friday when the markets close on a Monday.
Correct.
They're just excited for their long weekend.
I think that it was kind of like a reminder, like people are like, whoop, whoop. And then it reminds everybody that not to come to work on Monday, maybe. Like that's my theory, based on nothing, no data whatsoever. But that's just my theory. And it's funny, if you're old enough to still have basic cable, turn on one of these channels at 3:30 and you can hear them in the background if they're on the New York Stock Exchange.
Yeah, you
Pretty
definitely
funny.
Put on CNBC, you'll hear it.
Cool.
Sometimes, but like my understanding is that they'll go to commercial at 3:33 because it's so loud that you can't hear anything. So I think they go to commercial or something like that.
And yes, our friend Jay Woods, yes, Tiger Woods' brother.
Yes, as usual, the media goes to commercial instead of giving the people what they want. I can't believe it.
All right, so I guess Monday is Martin Luther King Day. So
shout out MLK. Shout out.
Don't show up here at 8:30 a.m. on Monday. We won't be here.
You can if you want. You'll be
can.
all alone, whooping on by yourself. You know.
That's true.
If you show up at the New York Stock Exchange on Monday, there'll be the same amount of people there that will be there today.
Little less. All right, we got a lot going on. Should we talk about the market?
Isn't that what this is?
We should.
I don't know.
Hit it, baby. Hit it.
Sometimes I forget.
JC's so.
What was that?
The bumper cut
JC's
you
been
off.
waiting. He's been waiting for earnings season to come back. So
Are we? When is it not earnings season? Is
We
it
can
always
celebrate.
earnings season?
We just went through like a. We just went
Earnings
through
season.
like a 6-week period with no earnings. So you're welcome.
It seemed like there was always earnings. All right, let's do a quick little rundown. Dow futures down a quick hundo this morning. S&P's flat, NASDAQ flat. Bond futures flat. Gold up 2%, silver up 3%, copper flat, crude oil up 3%. Dollar slightly down here with the volatility index pretty much flat, sitting around 12.5 for the VIX. And yields just under 4% after getting slammed yesterday. And of course, in the old funny money, Bitcoin down 500 points, well off the highs, literally hit our upside target this week and stopped going up. How about that? The market, in fact, does care about JC's price targets. How about that one for the good guys? So let's see how that consolidates here on the old BTC down 500, about 1%, just under 46 1,000 for the Bitcoin, and Ethereum, on the other hand, that has not hit our price target, continues to make new highs, new 20-month highs today. Do I have that math right? Is it 20-month highs? It is not. It is more like 18. Right? Oh, no, it is 20-month highs. It is 20-month highs. That's cool. And on the old Solana, pretty much flat today, just under 100. But let's come back quickly to that. I mean, it is Crypto Friday, so quickly back to the ETH BTC. For those who are not entertained, we've seen more than a 20% reversal off those lows just in a couple of days. Monster move for Ethereum BTC, currently hitting new multi-month highs as those stuck in Bitcoin. As it turns out, it was exactly that. Sell the news, not a secret. Bitcoin stopped going up and Ethereum really started taking off, particularly relative to Bitcoin, as Bitcoin has done nothing but actually go down and Ethereum goes up. So that ETH BTC ratio absolutely ripping off the lows.
Biggest week for that ratio, right? For Ethereum outperformance since May of 2021. Biggest week for Ethereum on absolute terms since August 2021. Like the momentum.
Makes perfect sense, doesn't it? They finally give the Bitcoin ETF. There's 20 of them or whatever. And Bitcoin stops going up and Ethereum starts ripping, pricing in the fact that they're likely next, right?
Yep. Yosol, Coinbase thoughts, Steve? No thoughts, really. Bank of America is out here today. I think it's maintaining its underweight position and upgraded the stock to like a price target of like 80 something. So you can go listen to the sell side. Maybe they have something to tell you about Coinbase over here.
That's it. Let's listen to the sell side.
Yesterday was just a great day across the board to sell the news of crypto. I mean,
I just want to point out that CryptoPunks are up over 20% today. So the biggest winner of the Bitcoin ETF has been CryptoPunk holders.
So on the ETF stuff, did you see
shout out CryptoPunks?
Did you see what I dropped in from Mr. Larry Fink?
I did not. Who is Larry Fink?
BlackRock.
Yeah, I saw that.
Did he play for the Yankees?
BlackRock, CEO.
Got it.
The ETF man of men. He said
Larry Fink is the ETF man of men. I thought that was Eric Baltunis.
He covers them.
I gotta get him on the show.
I was gonna say, get him on the show. He was just on Bankless. I was watching the Bankless yesterday with him. Get him on.
So the headline here is Larry Fink says that he sees value in having an Ethereum ETF. Who would have thunk it that the conversation would move over to launching a spot Ethereum ETF now here at the end of this week? But already seeing it.
Are you really surprised that the conversation is now what's next?
No, I'm this is right on time.
Yeah. I mean, I think that makes sense.
What we expected to see from him. And this is earnings call commentary.
You still listen to those?
No, but
what's the app that you use? What's the app that you use? Quarter.
But I get them summarized in my feed here, especially the big ones. So
you use AI?
Nope.
You could.
I think our buddy might be who's getting me this data at this point. Getting better and better all the time. But
I should have bought another CryptoPunk when it was in the 60s, bro. Me and talked about it.
What?
Because when it goes to 1 million, I could sell one of my CryptoPunks. I can make $1 million or 900,000, and then I still have another CryptoPunk, right? That was my theory, and I didn't.
Okay,
a bummer because that's close to a triple already. If I would have pulled that trigger, me and Lindsay, we were talking about it, and we didn't do it. Oh well, I guess I only have one CryptoPunk. So when CryptoPunk goes to 1 million, do I sell it?
You can't do fractional shares in CryptoPunks.
I can borrow against it. That's probably what I'll do.
Okay. All right. Anyway,
there's like a lending protocol.
We're gonna have Louis Sykes join us in a couple minutes here to go over his crypto thoughts. So let's do some earnings before that. We got a lot. We got the banks today. A lot going on.
Yeah. I'm looking through it.
Why are we just skipping over the state of the markets? Explain that to me.
Oh, I thought that was the state of the markets.
No.
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 Okay.
Go to slide 2, please.
Okay, slide 2. What's on slide 2?
This is consumer staples relative to the S&P 500, right? So if you're one of these weirdos who thinks that 2023 was a bear market, you should find a therapist, and you should speak to that person and get some help. The embarrassment that you are living through by thinking that this is a bear market is not going to come to an end, in my humble opinion, until consumer staples start to outperform the S&P 500. This has been a downtrend for over a year. Stocks have been ripping that entire period, right? In bull markets, consumer staples, the defensive asset here, historically underperforms. And that's exactly what we've seen here. One of many, 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 many market characteristics that reiterate the bull market that we've been in. Now, of course, what happened last year's one thing. What's going to happen this year could be another. So the question is, all right, great, JC. Well, what's going to happen next? Well, if these consumer staples relative to the rest of the market start getting back above those late 21 lows, which were also last year's lows, which were also the highs from this year, right? That former support turning into resistance, maybe only temporarily, maybe permanently. I don't know. But you're going to have to take out this week's highs to the upside in consumer staples on a relative basis. And that's going to be my signal. That's going to be my signal that this correction that we've been in, one can argue for about a month or so, when the new 52-week highs list peaked in mid-December, that this is going to be a much more aggressive correction versus just a clean digestion, which is what we've seen, right? With S&Ps at the highs of the year already, NASDAQ at the highs of the year. Things can get worse into January and February. In fact, my bet is things will get worse into January and February if you start to see some outperformance out of consumer staples. To be clear, you have not. So I think that when we talk about the state of the markets, this chart needs to be front and center. What do you think, Spencer?
I mean, we've talked about how the rotation hasn't come yet for staples and utilities, and I suppose that's it, right? But I guess it's logical that they do at some point.
If the market is going to correct, you're going to see some strength out of consumer staples relative to the S&P 500. That is the defensive rotation. It's not bonds, right? People keep telling you that bonds are, risk-off asset, a defensive asset. They have not been at all. Consumer staples have proven that they continue to be that.
But there are degrees of defensiveness, and in the on the spectrum of defensiveness, rotating into staples is not. It is while defensive is not like the most risk-off thing.
Yes, it is. It is the most risk-off. Of course, it is.
No.
What's more risk-off? Tell me. Go.
Cash.
No, because a lot of long-only mutual funds and institutions can't go to cash. They have to be in equities. So that's not an option. Next.
Okay, for those people, sure, but I'm talking about any other any other multi-asset fund. You can own bonds, you can own cash, you can own.
Okay, but bonds are not defensive at all. Bonds and stocks are moving together.
Yeah, right now that's true.
Right, which right now is the only the only time that matters.
Right.
20 years ago it may have been different, but now is the only market that matters. So go ahead. Tell me more. Keep going. What else is defensive?
No. I don't think I'm saying anything that's. I know you're giving me a hard time, but I don't think I'm saying anything that's not a hot take, right? I mean, staples.
Bonds are not defensive at all.
Okay, but staples are still stocks, is my point, right?
Right, but relative.
Yeah.
Consumer staples do well in bull markets, yes, but relative to the rest of the market, they do not.
Yeah.
The defensive trade is staples. Period.
JC, I think you've been overwhelmingly clear about the importance of staples on a relative basis here. And we have some very, very big and important earnings reports that I would like to get to.
Is there a horse that may be dead that I am beating?
It's been dead, I think. Yeah. We all agree with you. Spencer, stop it. Earnings.
All right. Do you want to go talk about Citi, which had its worst quarter in 15 years?
They just it's always Citi. It's
No,
always
it's not. No,
Citi.
it's not. It's usually Wells, actually.
How are they still around?
It's usually Wells, but
I think too, the banks have had some really ugly price action just the past few days coming into these reports now. I think I'm blaming Citi for that. Talking to a client about it yesterday. They announced that like $1 billion charge off. I think they spooked the banks heading into earnings. So
a lot of these earnings reports from the banks this morning are including this FDIC charge. This was announced a few months ago. The banks have to replenish the FDIC bank bailout fund, essentially, that got depleted last year for the crisis that we all lived through.
So we talked about, this is back to that theme of why will all the banks suffer when there are banking crises like this? Because the banks will be the ones paying for this in the end, right? And this is it playing out right here with the FDIC fund.
Citigroup, though, is in a league of its own here. They are cutting 20,000 jobs. They talked last year about doing a massive reorganization of the whole company. So the numbers this morning actually came in above estimates, at least on the bottom line. The top line, not so much. But they call
it Operation Bora Bora.
Right. If you look at just historical Citigroup earnings, the year-over-year decline from last quarter to the year ago period was pretty drastic. That's what happens in reorganizations. It costs a lot of money, right? So the rest of the banks, their numbers are more reflective of their businesses. Citigroup is they're in the shit right now.
What you're basically saying though is there's no good comp, right?
No, not here.
Because they've really slimmed down in a big way. So that's interesting. You know, so what else stands out from Citi just before we move on? I really want to get to JP Morgan. We'll just make sure.
I skimmed Jamie Dimon's statement.
Wait, hold on. Let's finish Citi. So Citi? Frazier said the fourth quarter was very disappointing.
Frazier?
Yeah, it's their CEO. They remain confident in their ability to adapt to evolving capital and macro environments, blah, blah, blah. They did guide revenue higher, apparently, during the call. Once they came out with the revenue guide, the stock reversed higher. And yeah, Spencer, 20,000 jobs being cut in the medium term, whatever the hell that is.
Yep. JP Morgan, I guess, their thing now in Jamie Dimon's statements is he just lists off every macro risk factor under the sun.
Yeah, I know.
And just says that they could all be problems. But anyway, the numbers themselves, bottom line, the EPS beat estimates. Sales came in a little bit light. That's not unheard of. JP Morgan does do that sometimes. So nothing really mind blowing out of the JP Morgan report to me. The stock is now up. It was down, but now it's up in the pre-market at 174 or the 73.
The one big thing that stands out to me from JP Morgan is really the bread and butter of the banks, and this is a read through for regional banks and community banks, is the net interest income. So up 20% year over year. That's really strong, right? They need those numbers to start moving up again, and they are. So bond market kind of giving these banks what they want and need, and then just a really big bottom line beat. I don't know what drove that, but I don't know, 10% surprise on the bottom line. Yeah. Oh, and then investment banking's coming in light, which I did not expect. So that's a surprise. Interesting.
Wells Fargo, Gap beat, sales beat as well. Stock volatile, obviously in the pre-market, and I think there's the chart right there.
Down 2.5%. I don't know what they don't like about it.
Well, it's Wells Fargo. That's probably what they don't like about it.
Well, there's probably 50% going into that number.
Yeah. Well,
yeah.
In like
also true.
Not really. Throw up the JP Morgan chart real quick, though. I mean, this one is just so impressive.
Right again.
When we think about this group, look at this streak. So JP Morgan, been around for a really long time. I have 40 years of data here. As it looks here, pre-market, JP Morgan is breaking out right now to new all-time highs. And if it closes green today, you'll be looking at 11 straight weekly gains. JP Morgan, that is the most that we've seen in all of the data that I have.
No, I was promised a banking crisis. All I got was leadership from financials.
Things gone up every week since the October lows.
Best performing sector in the second half of 2023. Financials. You got journalists lying to you about a banking crisis because 3 banks that no one's ever heard of disappeared.
No one is talking about a banking crisis in like 9 months.
But they were, Spencer. They were.
Yeah, 9 months ago.
They're not here to help you, folks. Are you paying attention? These people are not here to help you. Just because they went to an Ivy League school doesn't make what they say and write not gossip. It's glorified gossip. That's all it is. They're not here to help you.
All right.
So they're obviously these banking CEOs are coming out and giving some commentary on interest rates and the future path of interest rates. So that, pay attention because the bond market's definitely listening to this. JP Morgan's Jamie Dimon probably more than anybody else.
Higher for longer. Yeah, Jamie, we get it.
Higher for longer, inflation stickier than markets expect.
Yeah.
This is the big question now in 24 is where does inflation go from here? Because you can make a really good argument on both sides. Like I said, we did that on Twitter Spaces. I think it was last week now. Great cases are being made for stickier inflation and maybe, re-acceleration in inflation. And really excellent case can be made for continued disinflation. So I think that's the biggest question mark for markets this year. And you look at break evens, they're holding in, not giving us much information. Same place they've been for like 2 years now. So
I think there are too many inflations.
There's 3. There's 3 inflations.
There's more.
I guess there's 4 with the stag.
There's the stag, the dis, the in, and the D.
The dis, the in, the D, the stag.
And shrinkflation.
Shrinkflation. Wow.
That's 5. Okay. I'm bringing
Is there a vibeflation?
I don't know.
I have a question for y'all.
Yeah.
Yep.
Spencer's like, here we go. My question is, and we could bring Louis on after I ask the question. Vanguard, no Bitcoin ETF stuff. No, they don't like it.
That's interesting.
Yeah, I mean, Vanguard. Look, for all the great things that they've done from a low-cost investment standpoint, they're not known for having the best offerings to be like a Vanguard client, right? They're not known. They don't make it easy to sell. They hate it when you sell. That's not the point, right? They don't have, from what I've read, they don't have like the best customer service. That's not where their focus is. Their focus is just low cost investments.
And they don't. To their credit, they don't need it to be their focus.
No, they don't. So this is not their thing. This just isn't their thing. So anyway, okay.
So we got Lou Dog coming on, and then what time Batnick?
Right after Louis. So we gotta go.
Ooh, what a day! What a day!
I know.
Yeah, you.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
I keep doing that, Steve.
Hey guys, I've never seen you more disinterested in a conversation, Jay said, talking about bank earnings.
Oh.
Right. I'm sorry that you guys don't like it, but this is what's important today, and that's what we do here on the morning show.
It's important to you.
It's important to everybody. This
but the Bitcoin ETF, isn't important.
I don't care.
That's not important.
Important to the market.
I know.
Just because you care, and there might be some people in the chat that care, and they're welcome to spend their time. What's this Fink guy, Larry Fink?
We're long calls in these banks.
Listen, let's get on to something. Let's talk about what I know. We're long Wells Fargo. Can we talk about and Key Corp? Can we get to something important and not these fucking bank earnings? Louis, come on. CryptoPunks hitting new 20-month highs. ETH BTC 20% ripper off the lows. Come on now. I
want to talk about ETH, not CryptoPunks. What's the market cap of CryptoPunks these days,
Isn't it the same conversation?
That is the same
coincidence
conversation.
that CryptoPunks are up 20% after the ETH BTC ratio rips 20%. I mean, it's one and the same.
Can you tell me the market cap of these CryptoPunks?
Billion and change.
That's not bad. It's not small.
They're small caps.
Market cap is 1.5 billion.
So
it's bigger than half the shit coins we're trading.
But that's all NFTs together.
No, that's just punks.
Really?
Yeah.
They're a small cap stock. Very cool.
They're almost a mid cap if you really want to get,
Oh, wow. Oh, we're going to talk about this chart again. Great. Louis, I finally did it. I bit the bullet, chasing these leaders a little bit out here. Entered Celestia, Optimism, and finally the Injective all this week, throughout the week.
Finally, it's a bit late. I mean, we've been talking about these charts for months now. Now you finally enter into them?
I know. First time buyer.
Lou Dog, can we get back to what's important here? Ethereum, Bitcoin. So they give the people what they want, 297 Bitcoin ETFs. Everybody gets a Bitcoin ETF. It's like Oprah. You get an ETF. You get an ETF. You get an ETF, right? Great. Bitcoin, as it's hitting our target at 47,000, sells off on the news and rotation into the Ethereum. So is this the roadmap now where Ethereum now rallies into the ETF announcement? They get the ETH ETF, and their rotation goes into the Solana. Is that the roadmap?
You guys have been saying all week. We've been saying all week. This whole Bitcoin ETF. There's just so much noise. Just ignore it all. Market's been pricing this in a long time ago, and now that you got the ETF news, you've seen ETH rally, and it almost reminds me of the ETH merge back in 22, right? Everybody was hyped about this ETH merge. It happened. What happened after that? ETH BTC just collapsed and never looked back.
Yeah, what the proof of work and proof of stake and all that stuff. That's what you mean?
Mm-hmm.
Yeah.
And so if there was ever going to be a place where ETH BTC bottoms, this would be it. You've got a nice momentum divergence. It's at the lows of 22. And you got all this, markets like to bottom at, these inflection points, right? You look at the commodities market, you look at crude. What a perfect place for the commodities market to put in its long-term bottom when crude trades below zero. Like, it's poetic. It's poetic that ETH BTC bottoms when a Bitcoin spot ETF gets released.
Also, if I may, during whipsaw hunting season, which is that week between Christmas and New Year's where you have low volume, looking for extended trends that get slightly more extended and then reverse come the new year, this was front and center. This was front and center whipsaw season. And well, here we are. No
disagreements. And then you pull up the ETH chart. We could be talking about ETH at 7,000 at the end of the cycle.
The more important chart, guys.
Wow, hold on a second. Whoa. Did you hear what he just said?
Yeah, I'm with him.
ETH at 7,000. My punk's at $1 million.
Strazza says 20,000.
Dude,
wow. My punk's at $1 billion at that point.
Kathy Wood's out here yesterday saying $1 million. So yeah, give me a break.
Well, as long as Kathy Wood says it, it must be true.
Well, there you go again. Leave Kathy alone.
I didn't say
you guys are like an old married couple. I love it.
Why? Because I'm always right.
I'm so excited to see you all in person next week.
Hey, it's going to be great. So this time next week is going to be my first time in New York. So you guys are going to have to show me.
No.
A few days after.
Saturday, right? Yeah.
Are you gonna stay to spend some time to explore the city and stuff?
Our hotel is in Bedford-Stuyvesant, and just walk around, just ask for directions.
They call it Stuytown. Town.
No. These are two different neighborhoods.
Okay.
Stuytown is in Manhattan. Bedford-Stuyvesant is where the notorious BIG is from.
Oh. Okay.
Not pretty this time of the year.
Where Brooklyn at?
They're gentrifying it. Bed-Stuy is actually becoming a little nicer and nicer over the years, actually.
Brooklyn.
Anyway, Louis, we will see you in a little over a week.
Sounds good, guys.
Louis, are you kicking him out?
Well, we have Batnick here.
Give us a trade. Give us a trade, Lou Dog. Give us a trade.
ETH, long above 2K. Keep it simple, baby. Keep it simple.
Where are we taking profits? Where are we taking profits? At 4 or
at $1 million, bro? At $1 million.
Now stop.
Tell him.
Are we taking profits at 4? What about those spring highs in 22 that bounced? I mean, that's equivalent to 47,000 on the BTC.
Let it go.
That
Let it
Q1
go.
bounce in 22. That's
Oh.
the 47,000 equivalent, is it not?
It's a new bull market, and you're being so cute with these price targets. We're out here trying to make money.
Wow.
I'm here with Strazza.
Wow. Okay.
Why not?
All right.
Let's get those old highs at least, then talk about it.
Louis, I will meet you in Jamaica, Queens. Just stand outside. Just wait for me.
Louis, do you know what airport you're coming in?
JFK?
JFK? Okay. Just
yeah.
All right, that's fine. He'll be very far from Jamaica.
You should take an Uber there. It's lovely this time of year.
Thanks a lot, Louis.
All right, Lou Dog.
Adios.
All right, we got Michael Batnick here, crowd favorite. Let's bring him on.
Do it. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Mr. Batnick. Long time no see.
You guys are the best. I'm just sitting here in the back, just laughing and smiling. You guys are the best.
Dude, Louis coming from New Zealand to New York for the first time. So we're going to give it to him, you know?
He's gonna be like Will Ferrell coming to New York City from Elf.
Well, he's gonna be
first time.
No, he's gonna be like what's his face coming from Africa and coming to America.
Oh my God.
We have two.
What's his face? Don't. That's Eddie Murphy, sir.
I know, but what was his name?
Hakeem.
Hakeem. That's right. Good call. Good call.
Hey JC, before we talk, and Strazza, what's up, dude? Love the shirt. JC, before we talk markets. I mean, you can't be feeling too good about this. The Dolphins are in a downtrend. How you feeling about the game?
Secular uptrend, my friend. Secular uptrend. Nothing goes straight up. All right.
How do you feel about the game?
Listen, you remember those? You remember those Giants seasons where they looked like shit in some of those games towards the end of the year, and they got hot at the right time, and the rest is history. See or no?
They're not hot at the right time, man. You have no pass rusher, but other than that, you'll be fine.
I know the entire defense is. I know it's tough. I mean, we're handicapped going into the game.
But whatever. Listen, Mahomes. I mean, Mahomes has been the whole team has been dog shit. Not Mahomes, but the Chiefs have been terrible.
Dude, it's going to be 30 below.
Yeah.
30 below.
Yeah.
It's going to be one of the coldest games in history.
I'm taking the Chiefs money line and over Mahomes 1.5 touchdowns for even money. Not much confidence there, but that's how I'm playing it.
I like that. What do you use, Mike? Do you use DraftKings? Curious.
I use FanDuel.
Okay.
Batnick, that was a fun podcast the other day.
Oh,
great time. You guys are the best.
Dinner was great. We ate a lot. That was aggressive.
Oh my God.
The chat wants to know who's better, me or Fami?
Different.
You guys are both great.
Okay.
I don't do that. You guys are both great.
Yeah, that would be messed up if that would be messed up. They're different, right?
But Strazza, can we get you back on with JC next time?
Yeah, of course. Love you guys.
My most favorite of shows with the two of you.
All right. Well, let's do it. All right. So, Mr. Batnick, when you come from a unique perspective, right? You guys are managing. Chris said the other day 4.3. Are we allowed to say that publicly? You know how before you guys hit 4, like you were already at 4, but you weren't allowed to announce it.
I think we're allowed to. No, we're allowed to say what's on our ADV, and I don't know what's on our latest ADV, but something like that.
I'll say it. So 4.3 billion. Okay. Congratulations. And
thank you.
So you look at it from when it comes to like asset allocation and like client assets, right? Like you've got your models, and you've got some. Are you allowed to talk about sort of the crypto stuff that you're doing? How does that work?
We wanted to give people crypto exposure instead of them trying to figure it out on their own, pick stuff, chase stuff. And so we did it. And unfortunately, the timing wasn't great. But I think we did it very responsibly. It was a very, very small. Nobody was like, hey, I want to go all in on this. And we wouldn't have let them anyway. But we did it.
Cool. And then, so what do you think about this market? We talked about on the podcast a lot of the sentiment stuff, right? Sell side came into last year super bearish. They doubled down in the second half, wrong again. They're continuing to stay relatively bearish.
Listen, with the caveat that obviously things could change very quickly. The market looks good. Let's just start there. The market looks good.
And then, what do you think all these sell side guys are looking at then?
Dude, I don't care. I care a little bit more than you do, but I don't care. What I'm seeing is a broadening out. I'm seeing dips being bought. I'm seeing uptrends continuing to go higher. I think that the market is set up very nicely. Now we're coming into earnings season, and we'll see what these companies have to say. We're getting some of the banks today, some of the financials, BlackRock this morning, Delta this morning. So we'll see. Obviously, the tech ones are going to be important, but right now the market has earned the benefit of the doubt. Period.
Which country making new highs was most surprising when we discussed that last week?
Probably everything coming out of Europe, Germany. All that you hear out of Europe, at least all that I hear, and it's not like I cover Europe closely, but the headlines, there's just nothing but negativity. Nothing but negativity. So when the markets don't match what the headlines say, I trust the markets 10 times out of 10.
Yeah.
Everybody's opinion is in the price.
I liked what you wrote about sentiment. I think it was like last week or something, where you're talking about the AAII and how it was at like a record low reading in 2022. And you come out and say, survey data is noisy and started most of the time, but at extremes, worth paying attention to. Right now, is sentiment just not really giving us anything?
I mean, what do you guys think? I know you guys do a composite. It's sort of in no man's land. It's not telling you much. Like you said, Strazza, I think that there are a million different sentiment gauges. I love what you guys do, building a composite, not just looking at one metric, because it depends whether you ask the asset managers, the professionals, the mutual fund people, the retail people, and most of the time, it's not worth paying attention to. When you saw in the spring of 2022 fewer bulls than at any time over the century, including the GFC and the dot-com bust, that was a tailwind for equities. And Josh and I were talking all about in January, and he was laughing at me, but I was like, dude, that's true. Positioning. People were way off sides, expecting the worst, and the news wasn't as bad as people thought. It's not like fundamentals were great in 2023. Earnings were flat, but people were expecting worse. Inflation coming down was huge. Coming to the end of the Fed hiking cycle was huge. People being offsides was huge. And it was just the perfect storm for a really nice setup. And did anybody think we were going to get a 56% rally in the NASDAQ 100, the best year since 1999? I don't think so.
What about all that cash, man? $4 trillion in institutional cash, right? That ain't granny locking in 5%. Those are institutions moving into money market funds. That's wild, no?
I don't see that as a potential tailwind for 2024. And I'd love to be wrong, but my view is that's mostly people moving out of their 0% checking account or savings account and into.
But that's retail. I'm talking about $4 trillion on the institutional side.
It's $4 trillion. Okay. Well,
retail's only two something.
I think we just have to see
hold on. So Michael, 0% of that institutional money market is people moving out of their checking accounts. 0%.
I understand. I understand that. I would also suspect that is not money that's going to come chasing the S&P 500. I'm guessing that's more of the fixed income bucket where they're saying, why would I take duration risk, volatility, and bonds when I could just lock in 5% of my cash? That's what I would suspect.
I think that's probably sticky money that hangs out there for a while, but we'll see.
So if you're an institution and the NASDAQ just put up a 50 spot and you're sitting with your thumb up your ass getting 5%, I don't know.
You also have to understand that even though it's $4 trillion, it's not as if this is 80% of anybody's portfolio, right? So I understand it's a lot of money, but I think that the money was very slow to move in, and I think it's going to be even slower to come out.
And I still think locking in 5% for a lot of people in a lot of circumstances probably makes great sense.
We don't care about
those people don't matter. I still avoid more.
Those people don't matter. I'm talking about institutional money. Those retail investors, grandma's checking account is irrelevant. I'm talking about real money.
Take it easy with grandma.
Grandma's going to be buying some.
I'm not hating on grandma. Grandma wants 5%. Knock yourself out, granny. Go nuts. Don't spend it all.
They're going to be selling grandma some spot Bitcoin ETFs out here in a minute.
Grandma is getting a negative return when you adjust for inflation and pay taxes. Granny, as happy as she might be, ain't making any money.
What are you guys most excited about? What are you guys most excited about? What's got your attention?
Well, we were just talking about like sentiment and positioning. I think that at the sector level now, maybe we have, something that was going on kind of like with the broader market in late 2022. I think for financials and healthcare, sentiment's just really washed out.
Yeah.
And the charts are looking better and better every day.
I'm bullish. I'm bullish on financials. Oh, JC, I pulled the trigger. I bought Moderna the other day.
Hey now.
I pulled the trigger. I would, if I had to like.
Is there any reason why you're buying one of the worst ones?
Is this a pandemic trade? Is there a new COVID?
Don't worry about what I'm doing. What about what you're doing? What if I had to play God for a second? What my preference would be for the first quarter. I would love for the markets to go sideways. I think that we've seen a lot of overbought readings, a lot of extreme measures over there. If we can digest these gains, not give too much back, couple percent here, couple percent there, I think that would be really healthy. I think it would not be necessarily like great if we just keep ripping. If we add another, 8 to 10% over the next couple of months would not be my preferred path, but we don't get to choose, do we?
Well, seasonally speaking, that would actually make perfect sense. Spencer, you want to throw up slide 2 here? Throw up a new slide 2. There you go.
Cool.
So wouldn't that be perfectly normal, Michael?
Would love it. Yeah. Let's do that. Hey, JC, why are you talking shit about Moderna? What the worst one? What are some of the good ones in healthcare that I should have been paying attention to?
I mean, you could look at look at what the Baker brothers are doing, right? Strazza has been pounding the table. Baker Bros?
Mike, you'll love this. They just closed out their largest position. Baker Bros are one of these biotech hedge funds based in New York. They made $9 billion over the course of over 10 years, maybe like 12 years, in Seattle genetics. They went like 7x on this trade. Look at this.
So they're putting this cash, and it got acquired, so they're putting this cash to work in some really interesting names. So take a look at what the Baker Bros are doing. There's a website, Strazza, drop it in the chat or send it to Michael where you can see their filings.
Hey, let me just say, look, JC, I told you I don't take big losses. Moderna, this is nothing. This is a trade. If it breaks below and stays below 100, I'm out.
Well, I like it. This one looks real squeezy here, like gunning back towards those pivot lows from last year or 2022, even around like 115. I like that level a lot.
You know what's got my my panties in a bunch? Throw up slide 3. I know I've beaten this dead horse, but I'm going to talk about it with Michael because we actually didn't talk about it on the podcast the other day. This is it, bro. This is it. If you're going to get this correction in equities, you're going to get relative rotation into consumer staples. And to be clear, we have not gotten that, right? In bull markets, this line goes down. In bear markets, this line goes up. This line's been going down for over a year.
Let me tell you, I do own 2 consumer staples. One looks better than the other. The one that I own that looks really, really juicy is Domino's Pizza.
Is that a staple?
Yeah,
stop it. That's not a staple. No.
Okay, my bad. Fine. It feels stapley, but you're right. It's probably discretionary.
Domino's Pizza, shitty restaurant. There's nothing staple about that.
It's a staple. That is a staple. It might technically be discretionary, but I'm telling you, that's a staple.
It's a staple for people with bad taste.
It's a staple of Mike's household, maybe. I don't know.
I'm with you because JC, don't we say the same thing about McDonald's? Real staple.
They used to say that Domino's was a tech stock. Remember that?
Well, their app is what changed.
The Strazza, pull up DPZ.
Yeah, it's great.
The other one that I own, which kind of looks like shit, but there's 2 gigantic gaps that I think it's going to fill the first one, is Dollar General.
Dude, the base in DPZ.
A Michael Strahan size gap in Dollar General.
I'm going to steal that. It's great. Love the base in DPZ. It's like a perfect
JC's shaking his head like he just smelled a fart.
You're buying like the worst stocks. Like, you got any leaders? You buying any leaders?
No, I own MasterCard.
Oh,
what's that for a leader?
All right, that's a consumer staple.
Yeah, and all day with this gap, Mike. You're totally right. Yeah, JC, look at that. It fills it right up to the 150s. That's a nice trade.
What are you talking about? Dollar General?
Netflix. I own Netflix. You ever hear of it?
Yes.
I want to know what you've been watching on Netflix. You always have great recs.
So the TV's been pretty dry for me. I'm watching Fargo and it's picking up, but it's not great. I can't wait for True Detective. It's coming out Sunday.
Me too.
Who's in it?
Oh, I can't wait.
Who's in it?
Jodie Foster.
Really?
Yeah.
Dude.
Just her?
True Detective. Those
Who
were
else is
great,
in it?
especially the first season. So good.
I mean, the second one with Vince Vaughn was bad. The
Yep.
Mahershala Ali one was, I think it was season 3. It wasn't great either. But wow, it's been a while since we've had one. Yeah, I can't wait.
Michael,
I think they
best
just-
pizza in New York City.
Okay, so you're gonna like my answer. I had this recently, and I'm like, this is it for me. This is my number one. It's Prince Street Pizza, the pepperoni.
Yeah.
Good.
Yeah. It's tough to beat.
Can't argue with that.
What's the best steak?
Yeah. Ooh.
So here's my deal with steak. They all taste good. I've never done a taste test where I'm eating one bite after the next, because that's the only way to decide, because there's
Yeah.
so many factors. What are you drinking? Who are you with? How hungry are you? They all taste good. I like Bobby Van's, but I like them all.
Wow. What do you get at Bobby Vance?
You know what it is? We were there the other night, actually. I love the ambiance. You know, by the Helmsley building.
In the
I just-
Helmsley building.
Okay, and I love it. I just love the scene.
I can't believe they shut down the one on Wall Street, on Broad Street.
I know. I was there with you, right?
For the last day, were you there with Jay Woods?
Yeah.
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 All right. So best steak, Bobby Vance. Wow, I don't agree with that.
Wait,
best-
fine. What is the best steak? I'm just saying I like it. I like them all.
Man, I hate to say this because I feel like I'm just like a cheap date. You know, just I feel like I'm copping out here, going with a Midtown spot. I guess you did too. Del Frisco's, man. I hate to say
Yeah,
it. I
but
wish that wasn't my
it's
answer. I
good.
swear to
It's
God,
good. It's
I wish
good.
that wasn't my answer.
You're kind of making Mike's point, because it's like every new steak that you have is the best steak ever. That's just the most recent
No,
one
but I
you've
had
been
it.
to.
I had it
That's the
twice
whole
within a
Yes,
month.
Steve. The
I had it
best
twice
steak is
within
the
a
last
month.
one I had. Oh no. This is not a steakhouse, but Josh and I went to Cote the other day.
Yeah.
Holy moly! That's the
I wanna
best
go.
steak
I
I've
went
ever
there
had.
with you
We did. Oh yeah, we
like
went
a
to
year and a
Druid.
half ago, and Nick.
Dude, that was not a year and a half ago. That was probably 4 years ago.
Maybe.
Seriously.
I think I had just moved back to the East Coast, actually. That was one of my first back in the city moves. Yeah, post-COVID. It wasn't 4 years ago. It was like a year.
Hey, let
and
me
a
ask you
half.
this: Can I get a Domino's breakout in a bull market? Yeah, why not? Right?
Can
Hell
you
yeah.
get a
Because these
Domino? It's a
restaurants-
consumer discretionary.
These
I think
restaurant
it's a
stocks are
staple,
hot.
but
This is a
restaurant
good
stocks are
place.
hot.
Just
Yeah.
because just because it makes shitty
course.
pizza doesn't make it a staple.
Look,
Man,
at something like
Chipotle's-
Wings.
Batnick, what's the
Look at
best burger in the city?
Okay, I had one yesterday. Funny you should ask.
Bobby Vance makes a pretty good burger.
Great burger. I had this place called Eisenberg. It's now called SNP something. They rebranded it. It's by Flatiron. It was just a little nothing burger that I don't know on the griddle, like what they do. That was so good. But the best burger is it's Au Cheval / Fort Charles.
Oh yeah, true.
What is it?
Au Cheval, the Au Cheval burger.
Okay.
There's not.
Never had
That's it.
With the
number 1, 2, and
bacon.
3.
With the bacon.
Of course. With the bacon, of course.
With the bacon. Yeah. All right. I'll give you that one. That's probably right. I'm with you. All right. So we're one for 3. Actually, no, I agree with you on the pizza. So 2 for 3.
What about Manetta's or whatever?
Yeah. That's number 2.
Yeah, but you have to get the bone marrow and spread the bone marrow in the burger.
You are such a closet. Oh, remember we used to get the bone marrow at the Blue Ribbon place? Is that still open?
Yeah.
Blue Ribbon.
Yeah, Blue Ribbon's fantastic. But Manhattan Tavern, you get the bone marrow with the burger and you spread the marrow on the burger. I'm telling you.
Instant heart attack.
Michael, what do you think is going to be the biggest surprise in 2024 for investors? What do you think is going to catch people really, really, really off guard?
This is a lame answer. I mean, obviously, I don't know what's going to catch people off guard.
Most of your answers have been pretty lame, to be fair.
Okay, I think the market could do another 20%.
Yeah, me too. S&P's up 20.
I think the Nasdaq could do another 30. Why not?
I don't disagree.
Just another monster year. That's
and
great.
sell side gets it wrong again. That makes sense. What are the economists saying? What are these schmendricks talking about these days?
Not recessions anymore.
I think that the percentage chance of recession has come way, way down.
Yeah. All right.
So we'll see.
So we'll probably.
Oh, here comes a recession.
Yeah. I wouldn't be surprised. Listen, it's always what you don't think is going to happen.
And didn't we have a recession in 2022? But then they changed the rules, It's like
No, they never changed the rules. Don't be that guy. They never.
No, I'm asking. I don't know. I'm asking.
It was never. I wrote a blog post about this in like 2014. Jason Zweig wrote a blog post, an article about this in like 1991. The NBER never said 2 consecutive quarters of negative GDP. They never said that. Somehow that took over the popular narrative. They never said that because we did have 2 consecutive quarters of negative GDP. Yeah. It was a general decline in business activity as measured by blah, 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 blah. They never said 2 consecutive quarters. Dude, how did we have a fucking recession with 3.5% unemployment?
I know. But
people lose their jobs.
But don't they need like a black and white definition? Or are they just come in and tell us like, oh, this one?
Who are these people who have this opinion? Who are they?
A lot of power.
Watch out. Anytime I hear the Jews come to mind.
Who are these NBER people?
They're economists. I don't know. It's whatever it is. Who cares?
Are they part of the U.S. government?
I think it's an agency.
Are they just like underpaid academics?
Like Bureau of Labor Statistics, National Bureau of Economic Research.
You know what, Jason? Here's the answer. They're irrelevant.
Yeah.
They don't move the economy. They don't move the stock market. We know when it's a recession, right? We know what's up.
And we didn't have one. We didn't have one.
We didn't have one.
All right.
No.
I mean, credit spreads are making new lows out here. So.
Thank you. Thank you, Strazza. There you go. Look at the bond market.
Look at the bond market. Bond market's been right all along. Can you believe it? I can't believe it. They nailed it. Bond market was right the whole year.
So listen, I am always worried. It's never going to be something that we're talking about. It's not going to be commercial real estate. It's going to be something that is not even close to priced in. It always is.
Yep.
All right. Well, here comes the 2024 Ripper. Michael Batnick says record numbers for 2024 stock market. All in, Granny. All in, baby.
I'm all in.
I like it. Go Dolphins. Let's go. I hope you lose all your money on Saturday night.
All right, fellas. Thanks for having me.
Thanks a lot.
Adios.
Well, that's a bull market Batnick right there.
That is a bull market Batnick right there.
With the shirt and everything, yeah.
He's got me feeling pumped up.
Rachel says that one day she will learn what a credit spread is. Come on, Rachel.
You don't need to. You got us, Rachel.
You want to explain, Strazza?
I mean, we talk about them enough. No, it's simply the premium that
bonds. Can you throw up a chart? Throw up a chart.
It's simply the premium that high yield bondholders get for owning riskier bonds over risk-free bonds. Right? It's just a spread. Maybe high yield earns you 10%, while treasuries will give you 5%. The credit spread that we're talking about is that difference there, that 5%.
And it's supposed to be a certain amount, and how that spread changes is indicative of what the bond market is thinking.
When it goes up, it is simply a reflection of the fact that bond market investors are demanding more return to take on that risk. Right? So in bear markets or recessions, they need to be covered. They need a bigger return to justify taking that risk. In bull markets and fine economic environments, that spread will shrink and get very close to the treasury spread because they're comfortable to take on that risk. They're not worried about default or credit risk, right? And that spread might only be a couple, 100 basis points.
So, right? In plain English, if shit is hitting the fan, you're gonna see it in credit, and you're gonna see spreads widen. The spreads between junk bonds and treasury bonds, the more aggressive junk bonds versus the government-backed treasury bonds, those spreads are going to widen when shit is hitting the fan. When you look at Spanish bonds or Portuguese bonds or Italian bonds or Greek bonds or Irish bonds, any of these crappier bonds versus a German bund, right? It's the same thing. You got your riskier bonds, you got your safer bonds. Those spreads will widen when shit is hitting the proverbial fan. When credit spreads are narrowing, that is the bond market indicating that there is a lack of stress in credit markets. Line go up for stocks, essentially.
Yep.
How did I do?
Great. And not to be confused, right, with the yield curve or treasury spreads, where we're just comparing treasuries of different durations.
Right, like a 2s 10s or a 3-month 30s, and you got the 3-month 10s and the 1s 30s. You got all sorts of yield curves.
Wait, does any treasury spread matter as much as the 2-10, or is
10 3-month? They say
Okay.
Yeah, different people say different things.
They'll tell you that.
Stock market cares sometimes it doesn't. So, think about how many people. Think about what these fools did. These fools sold their stocks because they became sad that the yield of one group of bonds was higher than the yield of another group of bonds. So because of that, they were so sad that they sold their stocks.
Bad day for
Isn't that like that's like insanity? Like, think about what a psychopath you need to be to sell stocks because it upsets you that the yield of one group of bonds is higher than the yield of another group. Think about, like, you have serious mental problems. I mean, this is your competition, folks.
I'm so glad we get to do the show and talk about this stuff every morning.
Am I wrong?
No, I get it. So JC's talking about the inverted yield curve there, and how maybe that is a silly sell signal after all. But
it was never a sell signal.
First of all, even when it worked, it was like, hey, sometime in the next 12 to 18 months, shit's going to hit the fan. Good luck.
Well, actually, it was.
How good is that anyway?
It was sometime in the next 12 to 18 months, there's going to be a recession. That doesn't even necessarily mean shit's going to hit the fan.
It's like a derivative of a derivative of a derivative instead of just focusing on the one thing that's actually going to pay you. Like, people are making decisions on the stock market because they're looking at data that has nothing to do with the stock market versus just taking the data that the stock market is giving you. I just don't understand. Like, what kind of serial killer do you need to be to ignore what the stock market is doing and make decisions based on something that has nothing to do with the stock market? Like, I just don't understand. I don't understand.
Okay. Let's bring it back to some other news we have this morning. I want to talk.
We have more earnings. Terrific.
Well, I want to talk. No, not really. Well, actually, yes, but that's
BlackRock.
Yeah, I want to talk BlackRock for a second. They've had a really wild week on the news front. So on Tuesday, they announced they were laying off 600 people. It's about 3% of their workforce, doing a reorg there.
They're too big. They're too big. They have way too many employees, this company. Then
on Wednesday and Thursday, they're involved, of course, in the whole Bitcoin ETF fiasco. They get their thing listed finally. Congratulations. And then today, they report earnings. Oh, and by the way, they're acquiring global infrastructure partners for $12.5 billion in cash and stock. It's their largest deal since they bought Barclays in 2009.
And this is not a public company that they're buying?
No.
This is the Fink guy?
Oh.
Yep.
You know who Larry Fink is, JC?
I know now. Did not play for the Yankees.
What?
Oh my god.
Did not. He's the CEO of BlackRock.
Wait,
aren't you paying attention to the morning show?
What Larry played for the Yankees that I'm not getting? Is it a Seinfeld joke? Okay, sorry.
Whoop whoop.
Yes, fair enough.
Whoop.
Anyway, that's that. All that is to say, BlackRock. The chart speaks for itself. After all of that, we give you all that news. The chart is what it is. It looks pretty good to me.
And they're frankly
off. But yeah, I just wanted to get all that out of there and say BlackRock has had a busy news week, and they're doing a slight reorg of the business. Not as crazy as Citigroup, but anyway,
reorgs.
Yeah, I mean, Citi's really getting after it. They are going to shrink a bit.
Yeah. Mm-hmm.
Alibaba. Did you see the Bank of America commentary on Alibaba?
No, I didn't.
Well, listen. This is why we give the sell side folks a tough time. They're out here.
For the record, they give themselves a hard time. It's not our fault.
They're out here raising their price target on Coinbase, maintaining an underperform, raising their target from 66 to 79, while they tell you that they continue to like Alibaba and all these bullish things about Alibaba.
Yeah, I don't know.
People have to wear a tie at work.
I mean, it just doesn't need to be this hard. You don't need a 20, 30-page report to know that you don't want to buy Alibaba when the chart looks like it's looked for the past few years.
Yeah, but you need to write a long report to justify your employment. Like, you have to show people like, hey, I'm doing something. It might suck, but at least I'm doing something.
If we were on the sell side, we'd be like, bullish Alibaba because line go up. And you're saying they wouldn't like our reports. Wouldn't be good enough.
We would make terrible sell side analysts.
I know.
And it's something I'm proud of.
Yeah, me too.
We also had Delta Airlines and UNH this morning. Delta trading down, although the report was good, so go figure. And then UNH, I actually didn't look at the numbers, but it's
What happened to UNH yesterday? Oh no, this is today.
No,
Okay,
today.
yeah, down
That's all
today.
overnight. That's overnight
It's
action.
stuck
So
in this range for months.
down 3% this morning for UNH. That's all after hours pre-market action.
By the way, healthcare no longer the number one sector in the Dow Jones Industrial Average. Do you know what is number one? Any guesses? Any guesses?
No longer the number one sector.
Don't look. Don't look. Guesses. Go, Strazza.
Tech.
Nope. Spencer. Financials. How you doing?
I was gonna say
Financials.
There's a lot of them.
The number one performing sector during the second half of 2023. Financials now the largest component of the Dow Jones Industrial Average, which is the world's most important stock market index. I don't know if you guys heard.
Okay, I want to go back to JP Morgan. Speaking of some of the most important stock market indexes, JP Morgan, think of it as an index.
Yeah.
This is what we call a bellwether. There aren't many stocks. If you ask me, hey, you got a handful of stocks that you get to look at for a read on the broader market. JP Morgan's on that list every time. If this one is going to break out on earnings, mind you, it's up 3% here today. Looks great. Let's, we have a full day of trading that we need to get through, though. If it closes looking like this, 11 straight up weeks, biggest streak for all the data I have going back 40 years, clean breakout to new all-time highs. The chart here shows exactly what we're talking about. This is only incredibly bullish for the broader market.
By the way, it's not just JP Morgan. Somebody was chiming in on the chat. All JPM investing heavy. No, not all JP Morgan. Also Goldman Sachs, Visa.
Yeah. Amex, right?
Does anyone know where the term bellwether comes from?
If Wells Fargo puts in a shake here back into this base, I'm just looking at the way this candle looks like it's shaping up. We get some sort of big engulfer here, and this little coil finally goes.
The market opened 3 minutes ago.
On this action, I'm just looking at it and I'm getting excited because this is a setup I like. I like the little shake and go. Like JC says, shake and get some. Look at Wells Fargo, potential shake and get some candidate out here today.
I don't think I've ever said that.
Bull market, baby.
In a bull market.
JC's long calls. No?
Yeah.
Right. Good.
Does anyone know where the term bellwether comes from?
No, I would love to know. Spencer's fun fact of the day. I like it.
All right. Yeah. We need a sound bumper for my fun fact of the day.
Agreed.
It's a Middle English term. It refers to it comes from the term bellwether, where the farmers would put a bell around the lead sheep in the pack, and the male sheep is known as the wether. And put a bell around the lead sheep, and the lead sheep would lead, and the rest of the sheep would follow, and bellwether.
Wow,
I love that.
I had no idea. That is very fun fact.
Right now.
That is a very fun fact. I like that fun fact.
I had a feeling you would like that.
Yeah, that's a good one.
And it makes sense too for what we use it for, right? Same thing.
Well, that's why it's called that.
The bellwether, the leaders leading the pack.
Not a huge leap there. Okay. Couple other headlines for silly stocks that I wanted to discuss. I think we have the charts as well. DocuSign, this has been rumored actually for a little while. They are apparently trying to go private. There's a couple firms. Bain Capital is one of them in on this, trying to take this company private. Bain Capital and Hellman and Friedman are the two terms competing to take this one out. So DocuSign did spike 10% yesterday on this news. This was an IPO from 2020, I believe. I was actually in their offices like a month or two before the IPO, and everybody was in a great mood. But anyway, so I think maybe it's a year. I don't know.
You got to stay away from this one. Big mess. You don't want that to be your catalyst for higher prices, hoping for someone to buy something that, frankly, I don't know why this would get bought. I know we've talked about it on here before, but I don't understand why we need DocuSign when we have Adobe.
I mean, there's probably a lot more value in DocuSign at 60 than there is at, however high it got.
I mean, listen, there's more value in Peloton at 4 than
was the all-time high. So
Peloton.
My point is, if it's not worth anything, it's not worth anything. I don't know if it's going to get bought at all. First they said they were shopping for buyers. Now there are no buyers. Now they're talking about going private.
No. They have 2 buyers. That's the point.
Yeah, well, stock's up over almost 60% in a couple months. So
yeah. Why are we not talking about Tesla here? I'm about to actually. Well, not Tesla per se, but Hertz. I love this stock. I mean, I hate it, but I like it. It's so silly. A couple of years ago, Hertz announced they were buying 100,000 Teslas to add to their fleet. They only ended up buying 60, and now they're selling 20,000 of those 60,000 because it turns out people don't want to rent Teslas when they rent a car through Hertz. They also said that maintenance costs are a lot higher, and the MSRP of these things has dropped, which has made it even more of a financial burden for them. So
I would just this is the first I've heard of this news, but
yeah.
My gut reaction and my initial reaction to this is, whoever thought that was a good idea? Most people have not driven a Tesla, don't know how to drive a Tesla, probably think it's different from a gas-powered vehicle that they are used to driving and comfortable driving. Why would you rent a car that you literally are afraid you might not know how to use?
And if you've never charged it before, someone has to show you how to do that, or where to go to find the charging station.
And by the way, this doesn't mean people are dumb. My wife and I can't figure out how to use the Mercedes. Like, there's got so many buttons and doohickeys. Like, we've decided that we're no longer going to have a Mercedes, and we're going to, another G. It's too complicated. We have too many kids. We don't have time to read manuals on how to use all this shit.
Yeah.
So no more Mercedes. Too fancy.
The one time I drove a Tesla, A, I couldn't figure out how to open the door, and B, it had regenerative brakes, and which I have never used before.
Yeah.
So every time you take your foot off the gas, the brakes turn on, and I was just like this the whole goddamn time, and I wouldn't know how to turn it off if I wasn't with the owner, right? So anyway,
so I was talking to somebody yesterday. Get this, and I don't think you're supposed to do this, but I'm just going to tell the story anyway because it's cool. They were downtown at the bar, too drunk to drive home, had the Tesla, got in, and the Tesla drove their drunk ass home.
That's pretty cool.
That is pretty cool, man. I think that's still technically driving drunk. I think your hand has to be on the wheel, but he's like, I didn't drive at all. Like, the car just took me there.
For the record, the Mercedes is not a flex. My Denali is more expensive than the Mercedes. The GMC is more expensive, for the record. It has nothing to do with the money.
That's the flex.
Just too complicated. I got to spend more to get a less fancy car that we can figure out.
Big Denali flex there.
I do love the Denali, dude. We had flooding the other day, and I was just like in the Denali. Had to go to Rite Aid to get some butt cream, and I'm like, roar. It was awesome. Dude, we go through so much butt cream in this house. It's ridiculous, man. You guys don't have kids. You'll see. You'll see when you have kids how much butt cream you go through. We got these tubes. What is it? It starts with a D. What's Denison? No, that's uranium stock. It's something like that.
I know which one you're thinking.
Decidin. Sorry, not Denison.
So I'm just glad that you're going through all of this now and gaining all of this great experience, because then when it does come time for Spencer and I, we know exactly who to call.
Sure.
And
we have so much cream. No butt rashes in this house.
That's the tip.
And then you got the butt spatula. It's like a little spatula to wipe the butts with it. And then the kids put it in their mouth. It's disgusting.
Well, investing heavy makes a great point. You shouldn't be going to the store every day for butt cream. You should go to Costco and get that butt cream in bulk. They have bulk butt cream.
We got the Amazon thing, but we ran out the other day and we had to get the laxatives because the kid's not pooping. So I got to go and the dad stuff. No big deal.
Yeah.
No big deal.
All right. Oh, man. This show's gone off the rails.
Real life. It's real life, guys. You'll see. In the chat, they've got kids. They know exactly what I'm talking about.
I know they know.
Yeah, grumpy trade. Yeah, the butt spatula. You got to use the butt spatula because if you use your fingers and he gets in your eye, that's no good. We learned that the hard way.
Let's check it on the markets here. I'm seeing a lot of green, except for the dollar and Bitcoin and China and Nvidia.
Wait. China's not up today? I thought we got a little move from China here.
I'm looking at, maybe K-Web is, but I don't look at K-Web.
FXI's up, no?
All right. I was looking at the Hong Kong index.
Oh, you're looking at the Hang Seng?
Yeah. Yeah, FX size up. Yeah. Anyway, mostly green except for Bitcoin dollar and mega cap tech and discretionary.
Let's run down quickly. Dow futures up almost 100 points here, 20 basis points. S&P futures, new highs here, 40 basis points, up 20 handles. NASDAQ futures up 50 points here, up about 30 basis points. Bond futures up about exactly the same as stocks and bonds continue to trade together. Spencer Israel, not a safe haven. Gold up over 2%. Silver up twice that, up 4% on the day. Copper.
There's a safe haven, gold. All right.
Also not true. Count again, Spencer. Gold up 2%, silver up 4%, copper up 50 bips, crude oil 3.5% on the day. Natural gas, the widow maker, making widows left and right as usual, up 9% this morning. As you've got the volatility index actually up a little bit, right around 12.5, and interest rates holding below 4%. Dollar index rolling over once again. I'm telling you right now, guys, this dollar index takes out the lows of the year and starts selling off. I think that's bullish for equities. Look for a rally in the dollar if you are bearish of equities. And of course, back to the old funny money. It is Crypto Friday. Bitcoin down a G-note to about 45,300. Ethereum still up 2.5%. Right around 2680, and the ETH BTC up 5% on the day, making new highs. And my crypto punk up 22%, holding its gains on the day.
So, look, lower dollars. If the dollar does roll here, we want to look to international equities. Sometimes we talk about, do you buy the strongest ones, buy the strongest countries or regions, or do you look for maybe the weakest ones or the laggards to play catch up? I think the right answer on that is usually you could do a little bit of both. Throw up the Shanghai Composite because we're definitely early here. We need to see more, but just the past few days have been positive for China. Yesterday, China really stood out as, being higher in a sea of red for international ETFs and indexes. Yeah. Look at this level.
Strazza also getting back to the whipsaw hunting season. These were extended trends going into the holidays that continue to get extended. Looking for a reversal. I'm with you. There's something funky going on in China.
And the 10-cent music, so far so
absolutely
good.
Ripping. That's right. That's right. And it's almost like 10-cent music is not part of China. It doesn't look anything like any of these China indexes or ETFs. It's on its own. But when you look at something like Baidu, while all these things have been making lower lows, Baidu has been making higher lows. Not that it looks so great, but been making higher lows for 2 months, right? It's a lot more than you could say for the rest of these things, right? Alibaba, slightly higher low. I don't necessarily know that those are the ones you want to buy, but I'll tell you this much. FXI getting back above those December lows, there's your trigger. If you're looking for an entry point in China, if you want to be long FXI, what are you looking at? You're looking at 2280, right? I'll take 2290 even. You want to give it to 23 to really let it go?
Target for 10-cent?
TCEHY or TME?
Spencer, can you check what this uranium news is?
TCEHY or TME? Which 10-cent?
I was watching CCJ yesterday, actually. I almost bought
Nobody listening to me?
No, I'm listening. Price target, 10-cent music. Why not like 14.25?
What about actual 10-cent?
I'm not buying that one.
I mean, listen, if you're above the October lows in 10-cent, I don't hate it. Momentum never got oversold on the last sell-off.
Yeah.
If China rips, you don't think Tencent's going to go with it?
No, of course.
Isn't Tencent the largest company in China?
I don't know who is these days.
Probably, maybe. Okay, so
350 billion. Is there a bigger Chinese company? I don't think so.
Probably not. But hold on, Spencer. If you look at something like Tencent or Alibaba or any of these, we're going to draw these as bases eventually. Like if you just look at the current, multi-year range here coming out of these pretty big downtrends off the 21 highs. We will draw these as reversal patterns eventually. It's just how long do they take? And, we're out here talking about 10-cent music and other ones that are already completing them, right? If those leaders are going to go, you would think, okay, China finally bottoms at the index level. And we do talk about a chart like 10-cent in the future with a nice reversal pattern too.
Christopher Brown asking about our documentary. Christopher Brown, great question. Q1, it will come out in Q1. I'm dropping the hammer now. It will come out in Q1. Our first episodes, our first 2 episodes are in the can. We're working on episodes 3 and 4 now. Q1, we will be releasing Wall Street to Wall Street. So stay tuned for that. Strazza, to answer your thing about the uranium, I saw this headline too. The world's largest uranium producer, which I didn't even know was in Kazakhstan. The company is called Kazatomprom, which I never heard of before today. They said there's going to be a production shortfall. So basic supply and demand happening right there in uranium.
It's not this Houthi thing.
No, that's not uranium specific. That's more of a global trade thing, right? No, but if the world's largest producer of anything says that they're going to have less of the thing they make, then of course it would stand to reason that prices go up. So in my form here, I'm seeing the same. Uranium named strong at open following a few headlines out in regards to the Houthis, U.S.-UK overnight attack, as well as a shortfall in uranium for 2024 due to sulfuric acid availability. That's the headline I think you're speaking about, right? Yep. Science, man.
Whoop.
Sulfuric acid and
whoop, whoop, whoop. Are we gonna start whooping around here every Friday before a 3-day weekend? I think is that a new tradition here on the morning show?
I just think we should whoop on all Fridays. I don't really get.
We already have a Friday, Crypto Friday. We're gonna start a new Friday tradition. I think we carry on the New York Stock Exchange tradition.
I don't love celebrating a 3-day weekend because, frankly, I don't love 3-day weekends. I want my market open on Monday.
You need to have a conversation with Dr. Phil Perlman. That's some sick shit you've got in your head there.
You know what I'll do? I'll do a double. You'll see me out there. 36 holes.
36 holes on Monday.
36 holes.
Can I bring on our final guest of the day, Mr. Alfonso?
Please.
Yeah.
Please.
Let's go.
All right, Fonzo. Oh, you know, I got to tee up Fonz's. I got to tee up Fonz's bumper real fast. Fonz, get ready. Turn your camera on. Do all that good stuff. Where's Fonz's thing? There it is.
Hey guys, how's it going?
Alfonso.
Everything good?
What are you looking forward to the most coming to New York next week?
This time I want to go around the city. I'm very excited to see you guys again. Every time I see you in Washington, in New York, it's very funny, and I'm very excited. It will be my second time in the city. The last time I took like a day off during the weekend after the CMJ symposium, and it was not the best weather. Very rainy days, and I'm looking forward to.
You and Louis, there's this area called Hunts Point in the Bronx. It's really, really nice.
Stop.
You should go there with Louis at night.
Stop it.
Bring your heaviest jacket, man. All right.
Yeah, I will.
Well, Fonz was asking me yesterday. He wants to know if it's going to snow. It might. It very well could.
It is winter.
Nice.
We'll see.
I hope it doesn't, because it's a pain in the ass in the city. It's shit everywhere. You don't want it to snow.
I hope it does for you, Fonz. It's beautiful.
I hope it doesn't for me.
Okay. Yeah, let's see. But I'm very excited. Very happy.
Central Park looks nice, but the streets are a mess when it snows in the city. Oh,
I can imagine that.
Get your shoes dirty while you're trying to eat pizza. That's no good.
These uraniums are ripping. Fonz, talk to me about Biotechs. I love this bubble.
I bring like a bubble chart. You see us always asking for bubble charts, and it's basically in the y-axis the 1 month change, and in the axis the change since October 3rd. Why October 3rd? Because that day the dollar peak and the list of new 52-week lows peak. So I think it's a correct day to anchor and measure short-term strength. And the more to the upper right, the stronger, So Biotech, the equal weight Biotech ETF, it's right there.
So it's not just strength off the early October lows. It's continued strength over the last month.
Yeah, exactly.
Which to me is even more important if you right?
But on the X, let's start with just the X-axis first before we look at the short-term momentum. The change since October 3rd, you're seeing these interest rate impacted groups, right, as the big leaders, whether it's ARK, for whatever reason, whether it's speculative growth or biotech, right, because these companies need money, or home builders,
right,
interest rates, right, or if it's banks, interest rates.
QABA, right? You see that one there?
The community banks, one of our favorites.
One of your favorites.
Sure. But then when you do the Y-axis, just look at the past month. I mean, the bios.
Hold on, but look at the left side of the X-axis. What do you got? You got energies. You got China.
We had lithium.
Rare earths.
Yeah.
Rare earths.
Agriculture.
And what it got my attention in the 1 month change is not only biotech. We're seeing then XPH, IBB.
What's XPH?
That's
pharma.
That pharmaceuticals.
Pharma.
And I'm not including the equal weight pharmaceuticals that it this week broke out to new all-time highs. That speaks, broadening participation and strength underneath the surface in healthcare. Look, IHI right there, looking good. I know that IHF it's filtering with new 52-week highs. But today I wanted to talk about biotech. Let's take a look at these charts. This is an equal weight biotech. It's right there. How long will it take to absorb all this overhead supply at these resistance zones? We don't know. But what we do know is if price can break through this resistance, a new uptrend will be very underway in these names. And I think huge opportunities in these names are worth watching. So
love it.
This is the IBB. They look exactly the same. This week it reached new 52-week highs. So it's more about the same thing. And here is a nice table, biotech leadership scans, looking for the strongest and the best looking ones that are showing us nice risk reward opportunities, nice risk levels. So this is probably my favorite. MARUS, MRUS. Look at that base. Risk is very well defined. So a break above 33.50. I really like this name. But
pretty sure that's a hot corner name too.
$2 billion biotech.
Yeah, I mean, let's take a look at this one. CRNX, very similar setup. The same logic behind this trade. 37.5 for me is the line in sand.
Headquartered in San Diego.
Nice. Love San Diego.
Who doesn't? What a great place.
Fonz, it stands out to me that XBI is performing so much better than IBB.
Yeah, but Fonz made a good point of showing, when you zoom out, showing that they're kind of the same, right, Fonz?
Yeah, they look more or less the same. The difference is that IBB it's above the VWAP from all-time highs. Biotech it's XBI it's right there. So, but the price structure, it's more or less the same. It's a nice bearish to bullish reversal pattern carving out. Maybe we need a little bit more time to absorb this overhead supply, but if and when it breaks through these resistance levels, I think there will be a good opportunities, and it will bode well for the entire market.
They're both going to go, but what I will say is XBI outperforming. Throw up my chart that I just dropped in the chat. XBI outperforming speaks to bullish breadth, really healthy bull market internals in the space, right? Due to the more equal weighted structure of XBI. When you overlay XBI, IBB, you see that XBI outperforming the cap weighted version of the biotech index IBB is something that you see in a bull market, and then it underperforms in bear markets for biotechs. So I think you do get that relative breakout with these absolute breakouts in XBI and IBB. So that's encouraging, I think.
That's an HR.
I like it.
All right, what else? Immunocore.
Yeah, definitely. I mean, I like really this reversal pattern as WTX. It looks very, very nice. And of course, last but not least, IMCR. Definitely one of my favorite biotech stocks right here.
Making new highs as we speak.
Yeah, definitely. That's
WTX
name, insider activity in this stock. So,
and we are waiting. We're waiting with bated breath for an updated or an amended 13D for this one from Baker Bros. Right?
It looks different, you know.
Yeah.
So I really like this one.
All right, hit the recess. We gotta go.
Whoop, 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 whoop.
Whoop,
Recess. All right, I guess it's recess. Time flies when you're having fun. All right.
Who has more fun?
I want to talk about chicken wings.
Good.
I learned a trick recently that if you use avocado oil, I'm not a scientist. I don't know what it does, but for some reason, the avocado oil, when you bake the wings, makes it extra crispy. Where it's almost like if you fried them without having to fry them. So toss your chicken wings in avocado oil, and then do whatever you want after that. Buffalo, lemon pepper, a little bit of each, whatever. But avocado oil with the wings for the win. Didn't see that coming.
As opposed to like vegetable oil or something?
Or olive oil.
Or olive oil.
I mean, you don't want to use vegetable oil for anything.
Yeah, I know, but people do.
I know, but
when they're
those are people that want to die.
Mm.
Me?
All right,
It's a
avocado
bull
oil.
market. I'm trying to live.
Yeah, no, I hear you.
Yeah. Cauliflower wings. That's disgusting, Jonathan.
We're not gonna get that out of it.
Get that out of there. That's like eating Domino's pizza. Like, what are we doing around here? Come
on. So Larry just said Alf the homie fire charts 24/7. He's not wrong.
Thanks.
When did Baker Bros get that cash from SGen? You know,
they still don't have it.
No, they do.
Okay.
The Deal Club. Call your broker if you want to know like the exact day. I would call my broker and ask. They know these things. I don't know when the cash hit the count, but probably last week sometime.
Larry Thompson with the fun fact: avocado has the highest smoke point, so you get that extra crisp. All right, that's good enough for me.
Nice.
For any like media nerd or junkies out there like me, the funniest thing that I read in a while, I read it yesterday. There was an article about how ESPN basically, kind of like a mini scandal, they lied to the Emmy Association and they made up people in an attempt to get more Emmy awards than they were supposed to have gotten, and they did this over the course of like 20 years. And the whole thing was just hilarious, just so funny.
ESPN did this?
Yeah, and
so Disney did this.
Well, okay, sure. But so basically, to explain it very simply, in the Emmy Awards, if a show is nominated for an Emmy Award, then the on-air talent can't win the Emmy for that show, because then it's called like double dipping, because on-air talent has their own categories. It's like how for the Oscars, like directors don't win the Oscar for best movie. Anyway, you get the idea. So ESPN thought that was a dumb rule. So they would submit if a show got nominated, they would just submit they would make up names as like associate producers, and they would just get them engraved with the real host names and give them to the hosts of the show. So the host had no idea that they were not supposed to get these Emmys. They would just show up in the mail. It's no fault of their own. It was just ESPN being silly and saying, we have to make up fake names.
Where did you learn this? Where did you see this?
Yeah. It came out yesterday on The Athletic. Very, very funny. So now it's been 10 years later, and now like people are having to like give back their Emmy awards that they didn't turns out they had no idea that they didn't win it. The ESPN just gave it to them. I don't know.
I mean, it just gets better and better out here for Disney.
Just very, very funny. Anyway, obviously, guys, no show on Monday. Markets are closed. Enjoy the long weekend. We'll see you on Tuesday. Same time, same place. Our guest is Eddie Elfenbein on Tuesday.
Oh, so,
nice. Hell yeah.
Gotta go one guy.
No, it's good that we got Eddie because he makes his annual trades.
Yeah.
He only trades once a year. So that's now. So let's hear what he did.
Talk about all those changes to the portfolio. That'll be great.
That's right. Thank you, Louis. Thank you, Fonz. Thank you, Michael Batnick. Everyone, thank you in the chat. Smash the like. Go make some money, all right? Enjoy the weekend.
Ethereum.
Whoop, whoop, bumper. We need a whoop, whoop bumper.
Whoop, whoop.
Whoop, whoop.
Easy. Run it. I can't take no loss. I don't even know what it costs. I hit the